Guys, we're going to talk about why you need to start DCAing now. Maybe not go all in, but DCAing now, regardless of what you believe. You're not going to get the 12,000. You're not going to get the 19,000. You're not going to get the 5,000 that you're actually waiting for. If you miss the bottom at around 15,000 last December, you probably just missed the bottom and you need to just resign and start buying in, or at least dollar cost averaging in right now. Otherwise, you're going to be kicking yourself for not buying in right now once Bitcoin is 3-4 times the price it is right now. Let's look at what it took to get Bitcoin to that low price. It took Terra Luna falling apart. It took FTX falling apart. And those two are major things during possibly the worst economy since the 1980s to even get it down that low. Plus, you had all the SEC lawsuits, and the SEC has continued its rampage far after last December with, more lawsuits. With now, even though they lost the lawsuit, they're actually trying to force auditing companies to crack down on crypto companies during their audits. So crypto companies can't say they've gotten audited. Despite all that, Bitcoin has doubled since the FTX lawsuit. So it would take another massive major collapse to even bring it anywhere close. Yes, the economy's numbers, even if they were bad, wouldn't actually bring crypto down. No, banks collapsing like they did 3 months ago did not bring crypto down. And the thing is, banks collapsing actually helps crypto in the long run because that makes people more trusting in crypto than the actual banks. There's an ex-former Fed policy analyst lately that literally said that stablecoins are more safe than bank deposits. Now, I'm not going to comment on whether that's true or not, but there are people turning an eye to that kind of thought, which makes crypto want to go up even more. And the thing is, a lot of big financial institutions like BlackRock and Fidelity are getting more bullish on crypto. So the policies are going to favor crypto more and more in the future. Yes, there are people like Elizabeth Warren and Brad Sherman that are trying to bring crypto down, and Gary Gensler, obviously. But even within the Democratic Party, there are splits. Like Richie Torres is pro-crypto. Darren Soto is pro-crypto. So you basically have all the Republicans are pro-crypto and a split within the Democratic Party. There is a very good chance that future bills, at least regarding crypto, can pass both House and Senate. And the thing is, politically, the Democrats have to see that issue would be one of the few issues actually working against them, and they'll hopefully rectify that issue in the future in terms of crypto. So yes, there is a chance that Binance collapses, but let's actually look at Binance as well. Binance does have a license to operate in the UAE, and they have licenses to operate in Ireland as well. Plus, they are getting licenses in other countries, even though they've withdrawn from Germany. I think CZ is going to be smart enough to see that he does have to start abiding by some of these regulations, or he's not going to have a business anymore. So I don't think Binance is going to collapse because they do have a safe haven in the Middle East. So Binance going down is very unlikely. I don't think Tether's going down. They've been after Tether for years. Tether, through their various audits, have actually proven that they do actually have reserves. So I don't think Binance or Tether collapsing, which is basically your only hope. I don't even know if Binance collapsing would bring it down to 15K right now, because other crypto exchanges have already taken some of Binance's market share. So you need not just one, but multiple huge collapses again to get it down to $15,000. And that's just not that likely to happen. As for the inflation numbers, if you're hoping that to bring it down, I think you've got some bad news for you. The PCE numbers are getting better. Inflation is coming down much faster than people actually expected. And, the stuff at the grocery store has actually stopped going up in price. The interest rates are going to stabilize and start coming down. There are more and more homes coming out of the market, and people aren't in such a hurry to buy homes. So that factor is coming down. So I do believe Americans are going to get more confident in the economy. Now, the employment numbers are getting a little bit softer, but they're still very solid, which means that people who want to be employed are actually employed. So that's also not working in your favor at all when it comes to getting a new all-time low. And let's actually, a new yearly low or 2 yearly low. And let's look at the 4-year cycle. The 4-year cycle, it basically, it basically peaks, and then about a year later, or a little bit more than a year later, it hits its bottom. That's been the case every single time. Now, back in 2018, it basically bottomed at the end of 2018 with the Craig Wright hash war. Now, in 2019, in early 2020, in March of 2020, which would actually correspond with March of next year, yes, there was a flash crash for about 5 hours where it actually not quite matched the 2018 lows, but went pretty close to the 2018 lows. But that happened solely because of COVID. If COVID didn't actually cause all the businesses shut down, we would have never gotten that flash crash, because the stock market flash crashed that day as well. And it popped up within 5 hours. So many people didn't really even have a chance to buy in at those low prices. Now, if you're expecting COVID version 2 to hit and for America to shut down, I mean, I don't think that's going to happen. I think that was like a once in a lifetime type of deal. And I don't think all the businesses are going to shut down just so you can actually buy in cheaper. I think that's extremely, extremely unlikely. Without that, like Bitcoin would have never reached $3,000 last time. It would have reached like 5,500 or so, which is kind of comparable last cycle to where we are right now, about 80% off the bottom. We're about 100% off the bottom, but it's comparable. And like you could say it could dump to like $26,000. I'd be on board with that. You know, if you're waiting for 26,000 to DCA in, there's a decent chance you'll get it. But if you're waiting for 20,000 or 15,000, you're probably just not getting it. And there wasn't too much of a chance to buy in at that second dip anyways, because it was so brief. And a lot of the sell orders and buy orders didn't even get filled because the candle was very, very fast. And I don't think you can actually depend on another COVID event that actually crashes it for 5 hours before it goes back up. So if you look at the economy, if you look at the fact that it took 2 major crypto collapses to actually bring it down to 15, 16K, and if you look at the fact that we're probably just not going to get COVID 2.0 again, I don't think you can say that we can actually reach the $14,000, $15,000 low. And even in that COVID crash, we were about 10% off the bottom. And after that COVID crash, we recovered very, very quickly, as we were very close to having, and crypto went way up. So without that COVID crash, you might be able to get 26, 27K, but you're not going to be able to buy in at 12, 19, or 10K. I think that ship has sailed. You missed the bottom, and it's time to DCA in now, because if you look at the graph, without, just take out that COVID blip, because I don't think that COVID blip's going to happen. Without that COVID blip, you're basically, if you don't buy in at $26,000, $30,000 now, you're going to be buying in at $45,000, $50,000, $60,000. Now, this cycle isn't exactly the same as 2019, because 2019 we didn't really have, the economic problems, but I think most of that is actually behind us as inflation rates have actually come down. We did get a pump in summer of 2019. We didn't really get a pump of that magnitude this time. It can still happen, but I don't think it's really going to dump either. The macro factors don't really indicate a massive dump. Basically, like the 4-year cycle does not indicate a massive dump. The inflation numbers do not indicate a massive dump or anything. And there's really no other factors that signal that massive crypto entities might actually be crashing to cause that dump. I know a lot of you are obsessed with the, like charts and TA and all that stuff. And I've been hearing a lot of YouTubers explain in their charts and TA why it needs to go down to 12K or 10K. These are the same tubers that were saying that it absolutely needs to go to 200 or 300K. So a lot of the TA YouTubers, they are extremely bullish during a bull run and very, very bearish in a bear market. So they miss both the tops and the bottoms, and it's not nearly as good or nearly as bad as they explain it to be. But just looking at the timing of the 4-year cycle, based on the cycle, we should have bottomed about 6 months ago. And I think we did bottom about 6 months ago, thanks to the Terra Luna and FTX crash. Before those things started crashing, we were at 30K. We're at 30K right now, and that's why we're kind of stuck here. And I think we're going to trade sideways here for quite a while until probably next year, where we'll go back up. I'm still hoping for a late summer, early fall bull run. Wouldn't be surprised if it didn't happen, though. So for all of you that are waiting for 12,000, 8,000, or 9,000, or 10,000, or whatever, I would stop waiting, and I would definitely say you should start dollar cost averaging in right now. Because even if it does, for some reason, dip to that, you will still have some money left if you're dollar cost averaging. Don't go all in, but start to set aside money monthly to actually buy crypto if you're interested in accumulating more. If you're just waiting for a super low price, you might not get it. You'll be like those guys last cycle that were waiting at $3,000 for $1,000 and that never got to buy in until it was well past the $20,000 mark. So waiting on your TA or charts to fill in or like waiting for some kind of expiry to fill in at 12 or 9,000, I think is folly right now. I think you missed the bottom if you didn't buy in back in December hoping for more. And I think you should have actually bought in every time a major company collapsed, because until another company collapses, you never quite reach that bottom. So I think the smart thing to do right now is to definitely DCA in. If you want to catch the bull run, you definitely want to start DCAing and not go all in at the same time, but at least DCA in so you don't miss the entire boat. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.